Hey, greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Monday, February 23rd, 2026. Today I asked the question, did the NYSE just signal that it's over now for the bulls? Again, my name is Jeffrey Scott, Market MRI Pro at gmail.com. Google Group is Top Down Trader, and www.marketmripro.com. Now, if you watch my videos, it's not as if I'm just saying that today, and we haven't really answered the question. We have something to look at. And if you heard me on Friday on the weekend video, I mentioned that I have the biggest cash position I've had in a long time, and I've been concerned about the market. But the question is, should I be all in cash and short? And that's what we're going to look at right now. As always, these are videos are for educational purposes only. Anything I recommend should be in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors before making trades. And I've got tools in multiple platforms, but I'm an independent trader. Uh, just a quick promo for my Google group. It's called Top Down Trader. It's the only mailing list I keep, and I don't abuse it. You control your entry and your exit, so why would I risk losing you? I use it to send a note every night about what I think is going on in the market with the video when I post it. Occasionally you'll get an invite. You'll get extra discount if you buy any of my tools, so why not join? It's free. And when I move back to Discord, you get to come with for free as well. Know your news and earnings. From Waller today, we heard, hey, that if employment seems to be okay, then maybe he doesn't need to be in favor of any more cuts. I don't think that's what did the market in at all. Tuesday morning, we'll get Goolsby. I mean, what a great name, Austin Goolsby. Sounds like a character in a movie. Got the Case-Shiller home price indexes. Then we get Bostic, Waller again, and Cook. And then at 10 o'clock, we get some inventories, wholesale and consumer confidence. So modest, minimal to modest news tomorrow. Lots of Fed heads. Big earnings in the morning, Home Depot, before the market opens. That'll be very interesting to see. Kava afterwards, where they're popping up everywhere. Tempest, one that's had a big move up and down this year, will be interesting. Futures right now are trading up a little bit. There was some interesting action after hours with earnings, um, both to the upside and the downside. I think volatility is the name of this market, and if it likes your numbers, you do really well. If not, so VIR is a biotech company surging on earnings and early trial results, up 65%. MYGN up 18%, SGHC up 18%, Keysight, I guess that's who that is, um, up 15%, Max up 14.8, and then to the downside, UCTT minus 12.5, CD minus 8.1, HIMS continues to crater down another 6.7, Pay down 5.3 and Prim down 5.2. So again, this market is rewarding and punishing based upon earnings. And so we've got more to come in the morning. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For information about anything I talk about, my indicators, some of the crazy words I use for names of different things that I've learned over the years, mostly from Ian Woodward, just feel free to email me for anything, marketmripro@gmail.com. I promise I don't bite, and I'll respond personally. If you got the program and you don't have the new update, which we demoed this weekend, reach out to Praveen at coding@marketmripro.com. Speed is great, and there's some really cool features that are in the latest version. And let's take a look at the markets. Let's start with the daily briefing. We could see that volatility was up 3.77 at the higher part of the range. The dollar finished flat, high of the day, And then you could see all the ETFs on the markets were down at the bottom of the range. Spider down 1, Q's down 1.22, Russell 1.56, and diamonds, unusual for the diamonds to lead to the downside, down 1.63. And then Bitcoin, Bitcoin teased us last week and was actually up on the week, I believe. But we can see here that Bitcoin has started off this week to the downside with a big drop of 4.87%. Other thing that dropped today, if you look at the new highs minus new lows, the NYSE is down to 33 as a number of new lows have gone up. And unfortunately, the NASDAQ gets worse. Now they're triple digits to the downside. That's ugly, folks. You don't build higher highs when having more new lows in the market than new highs. How bad was participation today? You could see across each of these three indexes, their sectors, industry groups much lower than Friday, and participation to the upside. Only 26% advances in the S&P 1500, 28% in the NASDAQ, and 25% in the NYSE. Pretty down day. I escaped a lot of the damage, mostly because I had one stock go up a whole bunch on earnings and mitigate a lot of the other pain that I would have felt. If we look at what the one-day move in the S&P 500 ETFs, you could see staples up 1.23, healthcare 1.1, utilities 0.76, energy 0.46, real estate 0.11. So the more defensive sectors up, and the more aggressive risk-on sectors down. Financials down over 3%, discretionary down 2, technology down 1.6, industrials 1.35, and communications 1.23. The recent leaders have been materials, which were flat, industrials, which were down a bit, and energy, which was up. If we look at themes on the day, the only things above 1% were gold, silver, copper. Biotech bounced today on Arcellus being taken over by Gilead. Maybe it will bounce again tomorrow with the VIR data. And you can see lithium batteries were up. What were the big negative themes? Cybersecurity, software, cloud, cybersecurity, fintech, Internet of Things, e-commerce, cannabis, transports, millennials, consumer, artificial intelligence, leisure, social media, blockchain. These are all the things that a growth stock investor wants to be going up. So rough day for growth, a really rough day. If we look at the timing model, it shows it. We'll look at the weekly first. Now remember, the weekly doesn't count until Friday at 4:15 when we get the final data pieces and the markets are closed. No change yet in the weekly. Still the only sell signal remains in the Qs. But the daily, and let's flip back to the daily here. The daily is broken down across the board. So we have new sells today in the spider. We have a sell in the Qs, the diamonds, and the Russell. So with 4 daily sells and 1 weekly sell, I have to be more defensive. And I am defensive. I raised cash quite a bit, and I might be looking to do some more. Now, could today have been a bear trap and a head fake? Maybe. I don't think so. I think we'll show you other reasons to be concerned before we get done. But I have to keep that in the back of my mind. And the funny thing is, I guess we rallied Friday. We talked about it over the weekend. That Friday rally was probably saved by the Fed opinion on getting rid of the tariffs. But before the market closed, we had a 10% tariff put on everybody. So it's not as if that was a surprise. All that happened over the weekend was 15% instead of 10. Our total tariff burden actually is now down from 10% to 9% on that switch. Certainly there's a lot of rhetoric coming in that about people that cause issues, countries, and all the questions about refunds. But was it really that much of a change? How much of this really goes back to what we also saw on Friday? Slowing economy from a GDP, and we still have inflation. And one thing that markets hate, I hate, and you'll learn to hate if you haven't been through it before, is stagflation. So let's hope we're not going there. Let's take a look at the index ETFs to see if we get anything more encouraging than my commentary is so far, which is not encouraging. So we look at the S&P 500 here. This is the S&P X. Now, if you want to look for a reason to be bullish, we pull back and we bounced again at the purple line, which is the 100-day simple moving average. Um, we dropped from above the 17, which means we dropped below today the 17, the 21 EMA, the 50-day simple, and pulled into the 100. We have bounced here before. Now, these are predictive pricing based upon seasonality. If I look at the last 5 years, I see this one here, which is basically going to still go down a bit. 10 years says we go down, but interestingly, all time on the S&P says we might go higher here. So maybe we're getting into a mixed period of seasonality and not only down, but I kind of think the seasonality is negative. It's an ugly candle, but if I want to grasp for finding something that feels good, we ran into the 100-day moving average today. Ain't much. What are we at the high jump? At 14, we still got a long way to go before we're extended to the downside. If we look at the Qs, and they've been the initial play to the downside, and they are kind of look like they might be heading down towards the 200. Negative seasonality. They broke the 100, which had been support, and now you might expect it to even become resistance. That does not look good. If I look at the diamonds, diamonds had a pretty big break today. Again, broke the 17, the 21-day EMA and went right through the 50. Do they come to the 100 before they bounce? Notice where they bounce back here. We never used to look at the 100. I always had it on my charts. I just never really talked about it. But you could see the seasonality, at least for the next several days, is really negative. Russell, if I want to be not depressing, seasonality is not down as much, at least on two of the lines, and it pulled down to the 50 and bounced and probably has the best bottoming tail of the four. So I'm concerned. I think I could be switched to happy about the market with a couple of positive days, especially if we could get a follow-through day. But I think we have to raise the caution flag. And caution flag to me, especially in a month where we could see seasonal weakness, and what we should be thinking about is capital preservation. That's why I'm sitting in a lot of cash. And as I like to say, pseudo cash or cash equivalents, where I have my biggest positions. Like, for example, I talked about over the weekend when Bank of America was about 57, I bought 57 and a half. I looked at them, they're not 57, they're 57 and a half puts. Those puts go up when the price goes down. Why did I do that? I don't know. I like Bank of America long term. I've had it ever since the Great Recession when Bank of America got into the low single digits. So I'm just protecting short term with some puts. And then I'll sell the puts at some point when it starts to go higher. But I know I could take those several thousand shares of Bank of America, or yeah, their shares, and sell them for the 57 and a half. So to me, it's a cash equivalent. So well over 50% if you cash and cash equivalents in my account. Why? One of the reasons I've been concerned about is how do I explain this? Why is the VIX not coming back down to resting phase? This is resting. This is an elevated risk. Trying to figure that one out. So elevated risk here, positive seasonality, we have risk. And then the dollar I pretty much have been ignoring because it's been bouncing around under the moving averages and it is so far off of its prior highs. I watch, but I don't do anything. If you see, why do I have DXUSD? And that was because the UUP, which is an ETF for the dollar bull, had a big distribution. It made the charts look wonky, using one of my wife's words. Take a look at commodities. I think it's time to get some more gold. I mean, I like how gold breaks out of areas and kind of argue, why did that not take? Let's try that again. Because I probably clicked the wrong one. I mean, gold is just broken out of this area here. 1, 2, 3 touches and then a breakout. I think we're going to look at a gold stock as one of the options today, one of the opportunities. I should be careful because I talk about other kinds of options. Silver, um, dang, I'd like to believe it's going to be like 2011, meaning silver's dead for now. But I don't know. Thinking, I'm just wondering if silver is a new story too. All right, so we'll be watching those closely. Oil continues to do well. It lost a little bit today, I think. No, it was up today a bit, 0.06%, but it came down as the day went on. Still strong seasonality, at least for another week or so. Obviously, oil is rebounding well because of what's going on in the Middle East with Iran and the two carrier groups. Natural gas doing absolutely nothing. And then the 10-year rough day in the market. Flight to bonds, rates will come down, and you could see the 10-year was down 1.5% almost, and closing, wow, 4.03. Could you imagine another rough day? Do we drop below 3%? I mean, below 4% rather, into the threes? That would be interesting. And how about the 30-year? Also a down day, down a little bit less percentage-wise, 0.66% and coming in at 4.7. So at some point, weakening rates would be good for certain parts of the market like sectors. If we go and we look at the buckets, do we see a signal? Well, we're starting to build up a little bit more on the left-hand side. 12% on the Russell, 8 on the NASDAQ, 10 on the NYSE, 10 on the S&P 1500. There's no signal there. Just shows the market got weaker. If we look at market breadth, here's the signal on the NYSE. One, we broke down on this little potential flag breakout. We turned down a lot on stocks above the various moving averages. Even though we are still positive on the new highs minus new lows, you can see how it's come down. We turned pretty negative on AD lines and up-down volume. And we got another one of our little friends here called the Hindenburg Omen, which is confirmed. Why is it confirmed? Because this one here was on February 5th. This is the 23rd, so it's 18 calendar days. And it was already confirmed here. So this is a signal where you have never had a big market sell-off going back 200 years, at least 100 years, I should say, without having a preceding Hindenburg Omen. Now, 1 out of 4 Hindenburgs are not significant, but I think we can already see that we've had a sell-off on the NASDAQ after its Hindenburg. So we got confirmed Hindenburgs. The 13-week new high, new low is not at a reversal. It's at 0.52. It's neutral. It's 0.21 on the NASDAQ. So the NASDAQ, which is very different looking and been leading to the downside, is probably getting closer to bouncing. But you could see their up-down, their new high, new lows, or AD lines and up-down volume, all negative, but not massively so. I think we got more to go to the downside. And this Hindenburg on the NYSE, not making me feel bullish. If I look at the ratio charts, you can see that materials, oops, what did I do? Let me try that again. Oh, I hate when I do that. Well, let me see what fixes it with this. But I have to get Praveen to put the thing on the chart that resets it all the way to the right like it does on another chart. Materials, industrials, and energy have been leading here on the ratio charts. Seasonality, if we look out the next 15 days, next, I don't even know who they are, cheap stock. Um, I can start to look at over the next 15 days, for example, this stock um, up 80% of the time with an average return of 23% over the next 15 days. I don't usually talk about much seasonality, and the weekend thing I did, I wasn't real bullish on seasonality right now, but it doesn't hurt to look at AMR, Alpha Metallurgical Resources. It's interesting over the next 15 days from March 24th, so we got a little ways to go. 100% return from March 24th, averaging 12%. So we'll look at seasonality when we get closer to these dates. And I just ran that because I had trouble getting it to work over the weekend. I don't think I gave it enough time to run. On the broader market breadth tool, you could see that 0.58 on the 13-week new high, new low on the spiders, 0.52 on the S&P 1500, 0.34 on the Russell, and 0.21 on the NASDAQ. So both of these are getting close to where you might expect a reversal. And the other thing that's interesting, just looking over the long term, the spider, the AD line just keeps going higher, as does the S&P 1500. Yes, it dipped down a little bit, but look at the AD lines here on the NASDAQ Composite on the Russell 2000. For whatever reason, they look very different. You got divergences all over, and just a divergence between the different markets. If I look at the sectors using my other tool, which is just looking at their charts, and I superimpose some of my moving averages as well as the timing tool. Timing tools down here, Bitcoin continues to be bad. This is technology. The yellow line is a 30-period WMA. The purple one is a 21-day E. The white is the 50. You can just look up here to see what they are. This continues to break down. It's in a sell signal. This is discretionary, similar to technology, not so good. Here is communications. Well, it's just coming through the moving averages, but a sell signal nonetheless. So communication, tech, discretionary look weak. Industrials have remained extremely strong. They had a bad day today. We'll have to see if that's a one-day wonder or meaningful, down over 1%. Still in a buy signal, way up above the moving averages. Financials breaking down, and like I talked about BOA, they were down a lot today, like 3%. Energy kind of consolidating up here after a big run. High price of oil is helping. They were positive today. Here we have materials. So materials are in a bit of a pullback after a major run, but they are still in a buy and have been in a buy for some time. Real estate and staples and utilities are all holding up fairly well, and those are the defensive plays. So risk off, total risk off, and then there's materials, communication, materials, industrials, and energy perhaps are being driven by data center. And then I think it takes us back to Bitcoin, and then healthcare. Healthcare popped a little bit today. It's in a buy signal. It really doesn't look that exciting to me here, but maybe it's sort of setting up to run. We'll see if biotech doesn't lead it higher. So that's my take on the sectors. And then I like to look at the big stocks because, well, frankly, I own them in my long term, and you probably do as well. Key stock timing, when I call it. Let's look at what we got here. Start with Amazon. Amazon had a disappointing day today, a nice little bottoming tail, really hasn't broken down. Question is it going to recover, or is this just a fool's errand down here? I have a position. It wasn't happy today there. Apple, Apple did well today, all things considered, up 0.61%, got back into the buy zone, moving above the moving averages. I think Apple looks as good as anything in the mags here. Google failed running into the moving averages, and that's kind of what we have to be careful with. Apple still looks okay. If today was just a head fake, it can go higher. Meta failed at the moving averages, which is, I guess, the theme because they all were looking better at the end of the week. Netflix, no go. Tesla teased us here and is broken down. And then Nvidia, I think to me it's a Darvis box off the highs, and we're from the top to the bottom. It's a wide range, and we've got something coming out in the next couple of days. That is not the right date because we don't have this month's earnings yet. Earnings are out February 25th, which is in 2 days. Looking for a buck 52 versus 89, which is about 80% growth rate. Looking at 6612.44 versus 39.33. That's a pretty impressive growth rate. And I think the street's going to want to hear about what's coming, what their bookings are, and what their backlog is. I think if there's one thing that could break us out of this muck or really take us lower, it's going to be what happens on earnings on our friend Nvidia. And Microsoft, this is where the sell-off really started. The breakdown on earnings because of the big CapEx, which pulled down the rest of the mega caps here. And you have to ask the simple question, where's that CapEx spending going to? I think it's going to a company named Nvidia. So I'm hoping for a positive surprise. It's my biggest position, although I did sell some calls against it. LABU, we called out the big bottoming tail on Friday. It broke out, got a new buy signal today. We'll see if it can sustain it. It's kind of really in a choppy consolidation of late. Pharma holding up a little bit better. Lilly had some good news today, beating Novo Nordisk head to head. Data center, this is one that really drove a lot of where my dollars were. I've pulled back some. A doji after pulling back, maybe this is indecision and we're going to start to go higher. That would be great for the bulls. And then defense, you would think this thing would be doing well with what's going on with Iran, and it's had a nice run, although it pulled back a bit today, a little profit taking. That gets us back to Amazon. So my take on the market at this point is danger, Will Robinson. If you're as old as me, you remember what was it called? The Swiss Family Robinson. It was Lost in Space. And the robot would go danger, Will Robinson, whenever there was danger. Well, he'd be spouting that out right now. I really hope that, well, I can't tell you what to do. It's your money. I'm really happy that I have a lot of cash. And here's why I'm happy. If I'm right and this market pulls back a lot, then I'm going to have a lot more cash that I'm going to liquidate. But I have a lot of cash right now. And when I've learned that major market turns, and you stick with me, I'll help you find it. When we get to major market turns off the bottom, like we saw with April 7th, that's where the money's made. But if you lose all your capital pulling back, you've got nothing to make. Preserve capital is the message. If we go into the top-down perspective and just look at where the leadership was, ranked by percent return, we got three things that are positive: healthcare, materials, and utilities. But Jeff, that looks different than the S&P 500. Absolutely. I've got about 3,800 stocks put into sectors here. So this is the broader market, which has been the right way to look. And then if I look at percent return, the leading industry groups, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Medical, electric, water, medical, and then precious metals. Let's look at number of up dots today as the search criteria. Let's just go down through a couple. E-Habit, well, that's a big move. I don't know who these people are. Was it an earnings date? Let's see. Nope. What are the news? Must be a takeover. Well, I can't tell, but when you see, yeah, proposed sale. So this is a takeover, so we're not going to watch that. BNDA actually had a approval of a drug come in today, and that led to much of that move. A big drug approval for bipolar disorder. It'll be interesting to see if there is follow through on that. Viking, VKTX, this is another biotech. They have some weight loss GLP-1 related drugs. I think they have an oral GLP-1. Might be a weight loss moonshot in the making. Kind of thought that this one was going to be a takeout, but it hasn't been taken out yet. This is kind of an interesting breakout here after the downtrend. MDXG, Mimetics Group, too far down there. And then Lilly, as I mentioned, they had a head-to-head study. I know I've got a lot of people that I gave it to a long time ago that are still in it. I think Lilly still looks good. It's hard to buy up here. LEGN probably is up because it's a cancer therapy called CAR T, and it's probably the future type of cancer therapy, certainly for liquid tumors. And Arcellx, one of their competitors, got bought at double their valuation from the day before by Gilead today, and I think that probably caused a pop here. And then I'm going to stop at this one and then go look at the scans. Here's the one I'm looking at for tomorrow. I'll just cut to the chase. This is KGC. This is a Kinross Gold Corporation. It's still a relatively low-cost gold. It used to be really a low-cost gold. Its earnings are out. You can see it had a major, look at the earnings per share growth here with a forward PE of less than 12. Look at the revenue growth here. If gold goes higher, this thing goes much higher. You can see the pullback in an uptrend signal. No problem with the high-low jump. You have EMS, a CPR, a volume, breakout, and momentum with good relative strength in OBV. Here's my stock pick of the day for tomorrow. Now, keep in mind, I will look at, I'm not guaranteeing I'm going to buy it, but the way I approach these stocks are, I look to see if there, let me close the fundamental window. Is there any place to put a trend line? I don't know. I could put something there, and if a breakout above that, I might be interesting. So if I'm similar to the high here, let's take a look. Yep. So I'm looking for a breakout here. It's interesting. I'm looking at one of my programs that generates auto trend lines. They have a trend line here, and they took this trend line, take it off, and they drew this trend line here, which makes sense, and basically making the argument you got a big breakout here. I think this one looks really good. It's got to trade above the high of the day, and I think I'll be looking at this one. If I go to my scans, let's kill this window here and show you we have 3,640 stocks that made the scan today. And let's go to the impulse, and let's look at the double momentum scan. Now this is different than the filter below. That's the double momo because I put a few other things in it. We got DKS, which is Dick's Sporting Goods, like a breakout today. Junky looking chart. Not on earnings. It's got 343 coming in March, going against 362. NEWP was up today, New Pacific Metals, so it sounds like a young gold or silver play. RDN, Radiant Group, kind of a junky looking chart. Don't love any of those. If I look at the A, which is my pullbacks and uptrend scan, here's that RSelects, which pretty nice move, but you had to own it first. And maybe I should have been looking at this guy because I really thought this is Bloom Energy. And I did look at it over the weekend. This might be something else to look at. I am a sucker for earnings per share growth. It has sometimes been my downfall. And it doesn't look that impressive here. Make sure this is the right stock. But let me pull something up. So when I have a lot of tools and subscribe to way too many services. And the funny thing is, some of them go to one of my wife's card and she's asking who this is and who that is. And sometimes I don't even know because they bill as what do they call it, Patreon or they're PayPal. And no, if anybody's making a wisecrack, Patreon is not OnlyFans. We won't have any bills from them, I can assure you. So I'm just opening up Market Surge. I look at volume on it all the time, but I also really like their legacy charts. Hopefully I'll figure out whether I like their current. And what I like is they really do a good job on the earnings. So let's KGC. Actually, that's not what I want. I want a BE. Well, we could look at KGC too. Why don't we do that? KGC. And you could see for 26, 60% growth rate on $3 of earnings. It's got a multiple of 10 and a growth rate of 60. It right now it has an 18. I said if I where I get the 10, if I about 10 times 299 gets me to this price, 12 whatever. 18 times $3 gets me to 54. So if the multiple stays the same despite that really fantastic growth rate and it makes its numbers, it's a $50 stock. So I like that, but you want to see earnings galore. 100% growth rate each of the next 2 years, 26 and 27. That would almost make this stock cheap. It trades at a multiple of 202, but that's based upon the 25 and early 26 earnings. I think this is one where price can go up even if the multiple comes down, which it probably will. And I like Bloom Energy here as well. That's one of the reasons why I look at my scans. DNTH, biotech, I don't know anything about it. I love the seasonality short term. Looks like it wants to go higher. Don't know them. FDMT, 4D Moleculars, another biotech. Hudbay Minerals, this one looks interesting. Another one of the gold and silver stories with a fresh breakout here. Um, ITGR, don't know them, but a healthcare stock. TNGX, Tango Therapeutics, another biotech. And TYRA, another biotech. Look, when that many biotechs or healthcare stocks are flying and giving you buy signals, sometimes the best thing to do is to buy an ETF. And as I showed you, LABU, which is a leverage 3X biotech, looks okay. Another one is IBB, and they are different because they have different holdings. But look at that nice base if this thing breaks out here. Look at the volume today. I think on that note, I'm going to say have a great day in the market. Be careful here. And what if I'm wrong and we're about to go on a rate bull run and go up 50% over the next 6 months? I have a lot of cash to play with. So even if I miss the first couple of days of a big rally, who cares? Let's put the NASDAQ, put the Qs. And let's go back to March of 2020. March, bottom somewhere around here. All right. Do you think it mattered if you missed the first few days? Even if you waited till you broke the 50? I'd rather miss a few days than watch the market go up without me because I lost all my tradable cash. Have a great day in the markets on Tuesday, and I should be, probably won't be back until Wednesday. I'm traveling tomorrow. Take care, everybody.